Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you and a very happy Thursday. In today's program, I want to talk about the start of the earning season and what this means to the market, plus a couple of other things, some other gloomy stuff, I'm afraid. I'm still in the same mood like I was this morning, a bit gloomy. And so we talk some other things about what's going on in the markets and how the market is feeling at the moment. But before we get to that, don't forget, these little episodes are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So today's the day that the earning season starts. Now, the earning season, for those who aren't in the know, is when all the very large corporations in the United States release its Q2 profits. And this can have a massive impact on the market because obviously if the companies have missed their profit targets, it means they're struggling, which indicates that the markets are not doing so well. Okay, and today to kick it off on the note, which I think we're going to see quite a lot in the coming weeks, is that JP Morgan, their profits fall on higher sovereign loan reserves. Okay, basically their Q2 profit, their Q2 profit was 8.6 billion versus 11.9 billion from the same quarter of last year. Okay, same quarter of last year. Now this 28%, this is the worrying part. Okay, this is the worrying part. The 28% fall in Q2 profits from America's, don't forget, it's the largest bank in America, is due in part to them setting aside more money to cover potential losses due to the growing risk of a recession. What do I mean by that? Well, basically, they put some reserves to aside because they're expecting many individuals to struggle to pay back their loans, credit cards, and mortgages. So they are expecting people to default. So they really generally think we're going to have a recession. In fact, on the 1st of June, JP Morgan CEO, Jamie Dimon, he said, I said there are storm clouds, but now I'm going to change it. It's a hurricane. It's a hurricane. So indeed, very gloomy news indeed. In fact, let's have a quick look at JP Morgan at the moment before the open. Currently trading, it's currently closed yesterday at $111.85. Obviously, the market opens in about 12 minutes. So I have no doubt, I can't say for certain, but I'm pretty sure on the back of this information, we're probably going to open with a gap lower. So it'll be interesting to see where it is in a little while. Now, it's not just JP Morgan today, okay? Morgan Stanley also released their earnings, and they also reported a drop in the second quarter profits. And here's the thing. This is the first time that Morgan Stanley has missed profit estimates in 9 quarters. 9 quarters. In fact, they reported profits in the second quarter of 2.4 billion. Okay, the same quarter last year, it was 3.4 billion. Okay, so this is a worrying start to earnings season, and worrying start for the markets, without a doubt. Now, other banks are coming out to release their earnings. Wells Fargo and Citigroup are set to release their earnings tomorrow. Bank of America and Goldman Sachs are set to release their earnings on Monday. So again, like I say, are we going to have any surprises? If America's largest bank is reporting missing its profit estimates and is setting up a reserve cash flow ready for people to default, what are the other banks are going to announce and what the other banks are going to show? So a little bit worrying times indeed, which I'm sorry, guys, because I was a bit gloomy this morning when I was talking about the euro. I was very gloomy this morning, and I wanted to be in a better place today, tell you some good news, but unfortunately I cannot at the moment. Another story which is developing, okay? Another country and another political crisis. It just seems like yesterday we had a political crisis in the UK with Bojo. and all that. But now we have another situation, this time in Italy. And in fact, Italy's Prime Minister, Mario Draghi, who used to be the ECB president, Mario Draghi, his government is on the brink of collapse. This is basically due to the coalition breaking down, with the five-star group movement threatening to break away. And here's the thing: it's not only just political turmoil, okay? But here's the problem that Italy faces. Don't forget, Italy is the third largest economy within the Eurozone, after Germany, France, and then Italy. Okay. Don't forget their bond yields are record high as well compared to the Germans. Okay. And that's a worrying sign, because when bond yields increase on certain bonds, that means that though it's a higher return for investors, it's also a higher risk for investors. So there's the other problem they got, though. They have to still meet several legislative deadlines this year to secure billions of euros in European funds. And without a stable government, they could miss this. So they're already in a bit of an economic situation. And this is just adding more fuel to the fire. And we'll look at the euro in a minute, and when the euro is. And have a guess where the euro is. Have a guess. Have a guess where it could be. Any ideas? Well, we'll find out in a minute. I'll share it with you anyway. Something else affecting the euro as well. It's the gas situation. It's the natural gas situation. Don't forget, yesterday I spoke a little bit about, obviously, actually on Monday I spoke about it, and I spoke about it again yesterday. And that was the Nord Stream 1 pipeline. Bearish, yes. I am bearish at the moment, I'm afraid. Hello, by the way. How are you? Did you get my my answer about Google, by the way? I did it on my other video the other day. I hope you got that. What was I going to say? So, yeah, so this gas situation is really weighing down on European woes, okay? Because like I said the other day, the Nord Stream 1 pipeline is shut down for maintenance, which is standard practice. It does it every year. It shuts down for 10 years for maintenance. But this time, the market is generally worried that the Russians aren't going to turn the gas back on. In fact, French President Macron, he said today, citizens and companies will need to reduce energy use and prepare for a Russian cutoff. Prepare for a Russian cutoff. So this is a real deal. Sorry, my voice is a bit croaky. It's a bit really dry. So this is a real deal. So this is real fear. Real fear. Oh, okay. No problem. I'll tell you. I'll tell you in a bit. I was trying to remember. I think the earnings is due on the 27th of July for Google. Earnings 27th of July. And they don't forget, as well as that, they missed their last quarterly one profits by about 3.57%, I think. So, yeah, 27th of July, I believe their earnings are. It's either the 27th or 26th. I'll double check and say it again on another video. So what was I going to say? Yes, so this is becoming real, a real nightmare. And to add to that, okay, German Minister Robert Habeck, he says the uncertainty over the continuation of Russian gas deliveries is clouding the economic outlook considerably heading into the second half of this year. So, yes, no good news at the moment, I'm afraid. No good news at the moment. But let's have a quick look at the euro, because we discussed the euro a lot yesterday. No problem. No problem at all. Let's have a quick look at the euro as it stands. Okay. Yeah. Okay. And what do you know? What do you know? Just as we go and look at it, it was hovering around that level of 10.0027. It is now broken down that. It's now currently trading under parity, trading at 0.9978. 9978. Just as I go on to have a look at it, it breaks that level and it's now under parity. So yes, the euro, and I said this this morning. I was talking about this morning. I was saying how it was holding on, but I didn't expect it to hold on much longer. And there you go. Yeah, indeed. Whoa, indeed, my friend. Indeed. So the euro under parity, 0.9976. Now, don't forget, I mentioned the other day, IG, investment bank says they believe it can go all the way down to 0.95. And it was Social Bank. They said they believed it could go all the way down to between the mid-90s as well, 0.90. I think the very first test, if it maintains this momentum, we haven't cleanly broken through that yet. If we can maintain this momentum, I think around 9.838 would be a level to keep an eye on. But again, this is it was never at this level in my lifetime as I've been in this industry. I mean, it's never been like this. So that's quite shocking. Let's have a quick look at something else as well. If my friend's watching, guess what I'm going to look at? You guessed it, gold. Gold is under horrendous pressure, currently trading at $1,706 an ounce. Like I said yesterday, it's being hit hard by bond yields, higher US dollar, higher US dollar, and of course, obviously, interest rates. Don't forget, gold does not give interest rates as an asset, and it costs more to hold as well. Let's have a look at something else. Let's have a quick look at the cable. Okay, that's under horrendous pressure, 1.1798. Okay, so we got strong dollar. Let's excitingly have a look at the dollar yen, currently trading at 139.175. This is the highest level it's been at in 23 years. 23 years. So we have dollar strength across the board. So yeah, there we go. Right. Now you may ask, do I have any good news? My answer is no, I don't. Because US initial claims was announced today. It was announced at 244,000 versus 235,000 expected. So higher. Those who aren't in the know, don't forget, initial claims are those individuals who sign on for unemployment benefit in the United States for the first time. Okay. And like I said last week, it's a weekly event. Okay. Like I said last week, and like I said yesterday, I think the market tends to ignore this a fair bit, but they need to start paying attention to it. Because as I always say about in reference to initial claims, I consider it a canary down a coal mine. In other words, a early warning system. Okay. And this is the thing. This is the highest number, okay, since November. And let me just read out some of these numbers over the last couple of weeks, okay? And we can slowly see a steady increase in initial claims. 167, 185, 181, 202, 197, 218, 211, 202, 233, 231, 235 last week, and now 244,000. 244,000. So yes, indeed, I can see a steady increase in initial claims, which, like I say, this is an early warning system. So yes, that's we have it. Let's have a quick look at. I can't believe the timing with this. The euro. Look at it. Like I said, I've never seen this. I've been in the industry for 16 years, and it's never been trading this level. It's the lowest level in over 20 years. And like I spoke this morning in reference to the euro, I said it was holding on, and I did say I didn't think it could hold on much longer. Let's see if there's any dip buyers at the moment. But yeah, very, very pressured at the moment. Wow. Okay. I'm trying to think. See if I can do something cheery. But I can't really. Apart from the fact, okay, we have got some major events coming up tomorrow. US retail sales, and US Michigan consumer sentiment. All key events. Don't forget, retail sales is often important because we need people to spend their money. If they don't spend their money, no money goes into the system. With high inflation, with wage growth not growing at the same rate, and like I say, that's going to be an interesting number to look at. And consumer sentiment is obviously a survey and see how the consumer is feeling. So those are two events we need to keep an eye on. I'm going to have a quick look at the S&P 500 in a minute as well. Let's just do that now. See how the market is reacting to it as well. S&P 500. Okay. All right. Okay. It is negative. Obviously, if you look on the daily as well, we can see it's been under a lot of pressure. Currently trading at 3,752 points. Tech, NASDAQ, okay, that is currently also pressured. Currently trading at 11,644 points. So yeah, gloomy start to the market today. Okay, yeah. Okay. Now, like I said, we've got those two events coming up tomorrow on the European equities, how they stand at the moment. Okay, we have the FTSE currently trading at negative 1.53%, DAX currently trading at negative 1.77%, and EUROSTOXX currently trading negative 1.69%. So a lot of doom and gloom. Don't forget, you can ask me questions anytime you like while I'm live on air. This is what I'm here for. And don't forget, this is Tixee Live after all, and live does mean live. So do feel free to ask me questions. Like I said, if I don't know the answer straight away, I will often go and find out for you and then reply to you on that answer or my next video. And plus, don't forget, if you think of a question later, you can put it in the comments on either Facebook or YouTube. I will see them and I will reply to you live on air as on my next video. So please feel free to do that as well. Is there any questions? Do anybody like to speak to me about anything? Or just say hello, maybe. Yeah. Okie dokie, not to worry. If there's no questions for now, don't worry about it. Next time, please feel free to talk to me or ask me anything. This is what I'm here for. But like I always say, anyway, if you're watching me on Facebook and you've enjoyed this little episode, by all means, follow us if you like. If you're watching me on YouTube and you've enjoyed this little episode and found it interesting and useful, subscribe if you like. Hit the notification button on the side so you know next time I'm going live. Sorry, excuse me. Next time I'm going live. In fact, I'm going live again tomorrow. Don't forget, I'll be online again at 8 a.m. UTC, and again back in the afternoon to do my afternoon coverage at 1 p.m. UTC. So I will be back online tomorrow. And plus, as well as that, if you enjoyed this little episode and found it useful and interesting, give me one of those. It's nice to know if you're liking it. I've seen I've got quite a few likes already, which I really appreciate. I really do, and I really appreciate you guys coming along to watch me because this is what I'm here for. Anyway, on that note, please remember, even these videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.